TGIF, everyone. Hope everyone had a decent week. Come out of it in one piece. Everyone okay? Give me a Y if you're okay. How you, Phil? Deepak, how are you? Daniel, David, all my trading warrior brothers and sisters. So, to me, there were two doing pretty good. Buenos dias, Phil. The two major events in the market this week, from my perspective, was the S&P breakdown and something I talked about earlier in the week that it seemed so far away earlier in the week was the 2-week off number, which came in at 2830. This candle right here on the weekly, 2830.4 to be exact. Day's not over, but it's looking like we're going to get that 2-day reversal. Earlier in the week, there were levels that I know I talked about was this, 2,900 level. We haven't been able to recover to 2,900 now. What we held here and tried to reverse, if this is taken out, just arithmetically, it's going to take you back to this 2640 level, which is a level Blake talked about, I've talked about. So that's where I think we're going. That I was lucky. It was a classic turnaround Tuesday play. And the second event is, so, I'm saying lower. Uh, you know, uh, do I think that we're going to crash to new lows? I don't think so. But now you have to look for retracement levels where the market might actually powerful earthquake. I didn't feel it. What was the magnitude, Zig? Northern Nevada and California. Not given? Okay, well, I woke up with a little headache. So, anyway, my bed didn't rattle. I usually feel earthquakes. Anyway, what else? Pandemics, earthquakes. What's next? War? Anyway, hope everyone's enjoying living in Revelations and apocalyptic events and doing okay, more importantly, in the market with your health and your family's health. It's always my hope that no one, that I know or care about is touched, and I care about you guys. 6'4", yeah, that's a pretty good rip, Rick. All right. So here's something else I thought that would, could still turn out to be an earthquake. The other big event was gold, right? So it took forever in this triangle, right? And we finally got the breakout. I believed it was going to happen. It has happened. Now what, though, right? So, a lot of people really probably piling in on the 1720 breakout. Okay, yeah, so far you're Nostra FX. And what I could say here is I really thought in a couple of days that we'd already be at new highs, which is 1747. And something I was wrong about, silver has just completely blown gold away as far as performance. And this is what I was wrong about. The gold silver ratio I thought was going to rally. And look at this. Thought we were going to hold this level and try one more rally up towards 118 or 120. Now it looks like, we could be underway having something like this, which was one heck of a move, 20. So 20 from here is going to take it back down to 96 if this happens. Okay. Yeah, that's true. The obvious play is with Fed printing that the dollar will weaken. But when I look at the gold, and this is something else I've been talking about for a while. Here's Newmont, which isn't open yet. But look how it's diverging on the daily, and this was stronger than even the GDX. See, I thought this might be 1, 2, 3, but maybe this is 1, 2, 3. We'll see what happens today. But you have divergence on multiple time frames. See, we're not confirming on the 4 hour. I don't even think we confirmed on the one. We didn't confirm on the one. And the GDX is even a little weaker. It missed making a third drive just by a little. We didn't quite take out this high. So, gold hasn't made a new high yet either. But I'm just saying the gold shares, which led the way, are, giving me a caution, at least a caution signal. And so far, I'm just not that impressed with the rally in the gold. I thought after we broke out that 1747 would be a layup, and I have a piece on from here, and I'm going to try it again, add on up around 1740, and it's mainly based upon, and everyone on CNBC is talking about the miners now. Um, if you want to be conservative, just let it do whatever it's going to do here. And then let me just extend this out a little bit for you guys. Let's call it right there. So what you do now is you let it do whatever it wants to do, or unless you're bullish and you're looking for 1780, 1800. But instead of trying to hear the ice crack and get an edge, you can see we have a little 1, 2, 3. You don't short gold until we're back inside this formation. That'll tell you it's a breakout failure. And if Greg was here, I'd ask him if this out of the formation here was a terminal thrust, and can we fail before we make new highs? There are things I think called truncated or fifth wave failures. So I don't think there's a lot of people thinking about selling gold here after this kind of breakout. So it's very 1795. Okay, so that's kind of a measured move, isn't it? Okay. My view on rates is I'm really starting to lose patience, but I still own TBT. And when the end started to rally, I thought that we'd have a rally in yields. I'm not wrong yet. Sometimes you feel wrong just because it's not doing what you thought it would do soon enough. But there's nothing here that tells me this is a ghost tick. This didn't happen. Okay. Here's the TLT held again at this, 162 level. Today's going to be a pretty good test. But if all we're going to get is maybe another 100 handles in S&Ps to the downside and we head back up, I still think that this is a crowded trade. Yeah, I could be. I could be fighting. In fact, I am. I'm fighting the Fed. Okay. I don't know. I look at them as I'm not trying to put together the whole jigsaw puzzle. Dixie's still going up, but Dixie still hasn't broken out. So here, maybe next week, what we're going to do is try this 101 level, go shop for stops above it, and then fail. Because one thing I do believe is that the market, if it is not going to collapse and challenge the lows, the dollar isn't going to go to 103. If the dollar's on its way to new highs like 107, then yeah, S&Ps are, going to crater again and try the megaphone formation once again down here. But right now, I'm thinking we hold between 640 and 550. Okay. And I got flat on AG today. So I still think there's more left, but it's Friday. I'm actually kind of constructive on the yen. So let's see what kind of Friday, what kind of week we're having here on the yen. I think we're higher on the week. I don't think we got a 2 week reversal, 691. Yeah, we have a little 2 week reversal here, but my bias is more to look for places to buy the yen. And also, Greg made, I think, a great call. I put it on top. I haven't done anything yet, but I'll be stalking this one for a buy next year. Next year.
Did you just say next year?
I did.
Well, look, I'm gonna get along some gold in 2030. Can't wait.
Place your orders. Place your
So
orders for
excited.
2021.
Yeah,
I'm very macro this morning, Blake.
apparently, I know you've been rambling on about stuff, and now you're going to start buying stuff, and
I'm stalking
years from now.
things.
It's awesome.
Anyway, what can I say? I'm just a burned out old man trying
Friday.
to
Figure out
figure out what's going on in this mess. Anyway, I hope to be able to do something a year from now anyway. But before I hand it over to you, partner, guys, if you had a good week and we've helped you invest in your own career, trading career, and come in and work with the team in our trading room, in our in our forum and our chat room, and have all this research at the fingertips and have it on your phone when you leave and you can't be in front of your workstation. And it's really a way of saying thank you for us trying to help you guys for free every day. So if you think that you guys, okay, well, Daniel, let me ask you then, are you a subscriber? Okay. All right. Well, there's a nice testimonial. So, okay. So Daniel's doing, he's been with us for a few weeks. Besides being profitable, are you learning a lot? That's really important that you're learning because, after the partners sell Forex Analytics for $20 million next year, you're on your own. Right?
No
So
way.
yeah, I mean they have to learn how to do this and not be dependent. So anyway, you guys, if you had a good week and you're getting something out of Face, pay it forward and become a member of our community. Anyone going to do that today? Give me why if you're going to do it today. Anyone? Okay, well, sleep on it. Thank you, Sasa. And the weekend's really the best time. If you join today, you have all weekend to learn to navigate the site because a lot of people, we're getting a lot of new membership, and some people aren't taking the time to learn how to navigate, and they're coming into the chat room asking for things that are at their fingertips. Oh, what I was going to say about Euro Yen, I'm stalking it sometime next year for a buy, Jay. No, Grega liked it. If you saw Grega, okay, if you saw Grega this week, he showed a lot of great stuff, and he liked the Euro Yen. He liked the yen crosses. All right, so Blake, I'll see you next year.
I guess so. All right.
What are you doing to wrap it up here?
Thanks, Dale. I appreciate it. Now, I'm gonna give me a few minutes. I'll take it over here. And so, all right. Thanks, Dale. Let's talk about some of the things that have happened overnight. Which I woke up this morning. It was kind of slow, and then all of a sudden, equities. Equities are actually kind of selling off by the time I got up. And Nitish in the chat room's like, "Oh, it's the Huawei news." And where the U.S. is basically going to cut off Huawei from all global chip suppliers. That's it's a very negative development, because if you remember months ago, there's like one of the, I think it's a Global Times, one of the editors there, I think it's Global Times, one of the, the mouthpieces for China, their media mouthpiece news outlet anyway. um he was saying something like, if you ever go after Huawei in any way, shape, or form, it's like an act of war, you know,
Yeah.
in the eyes of China. And so this is it's kind of late in China right now. So you gotta be a little careful, um, about like getting some sort of response, a negative response over the weekend. I was just talking to the guys in the office, and the guys in the office in Greenwich. They're like, man, I don't know if you can go home long risk over the weekend. This could be really negative. You could get some really negative China policy response, and this is a, I don't know if this is the time, especially if you're long equities, this is the time that the Trump administration really wants to be poking the bull at this moment, because we're at risk of really giving back some of these gains that we've seen. um, so that's one of the big risks out there right now, and I think that's why the market's trading so heavy. Also regarding the UK, I got to go back and find his name. The chief negotiator, which would be, what's his nuts? Sorry.
Change. Remember it actually.
It, it's what?
It was somebody else's change now.
No,
So
Frost.
Frost. Yes, that's
Frost. Frosty. What's his nuts?
The snowman.
Frosty Nuts. Oh, Frosty the Snowman. Yeah. Anyway, I was trying to remember his name. Him and Barnier are talking. Anyway, he said little progress has been made, and so the cable slipped to new lows. Now, it shouldn't have been a surprise to any of you guys, especially if you use Forex analytics. But if you've been here, once we got below this 2240 level, and we retested it a couple of times over the last 2 days. I mean, we came off, and then but we could not get back above 2240, 2245, which is the breakdown point. Now that we're below there, that's a bit of a risk for the cable. Now, do I think the cable's going back to 114? No, but do I think it's could slump down to 120? Yeah, I think that's probably the risk near term, is that we push lower towards those levels, all right, towards like the 120 levels. So anyway, that's what I'm thinking regarding the cable right now, and that's going to play into a couple of different things too. Hold on really quick, bear with me just 1 second. Sorry guys. Okay, thank you. Hold on, I just got to change some orders really fast. Boop, 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 boop. Give me 1 second. Okay. All right. Sorry. So, regarding the cable, that's what the pound looks like. Now, the euro is trading a little heavier, but remember, we're near a lot of support down here. So just like yesterday, we were talking about how important the support was, and you got to be careful being on the short side of the euro while we're down here. Nothing's changed. We're near a lot of support, and does that mean that the euro is going back to 109? Maybe, but more importantly, I think that you just have to be really careful being on the short side down here, especially if there's a lot of euro crosses that are squeezing, and we talked about this yesterday extensively. Euro cable, euro sterling, we're trying to break out higher. So the euro's got some cross rate buying coming through the euro sterling, which is one of the most liquid currencies in the FX market. So that's naturally going to lend the euro a little bit of support. Euro Aussie has come off of channel support in the 50% retracement. Euro New Zealand's at new trend highs. We're above 181. You know, and like I said, euro sterling. Now the euro yen, I mean, even the euro yen, and I actually bought some overnight when it was down at 115.65, I think. And then I got up and I was basically break even. I was like, oop, getting out of that. Because that's when the stock market started rolling over. But if you look at the euro yen, we're at the 618 retracement yesterday. I bought the euro yen yesterday a couple of different times, played it long alongside you know, risk bouncing, and I think some of you here might have as well. But euro yen's near support. That doesn't mean that the euro yen can't break down. I'm just saying it's near support alongside with a lot of the other euro crosses. So that's where you got to be a little bit careful with, you know, some of the like trading the euro on the short side, is that you look at all the euro crosses and they still are bid. All right. Now, one of the things that I wanted to also discuss with you guys, sorry, I had to take a look at something. I wanted to discuss with you guys as well is that if you're looking at like the S&P and you're like, wow, it's trading a little heavy. One of the if you do trade equities, focus on the NASDAQ right now. I think the NASDAQ's going to trade a little heavier with this Huawei news. The NASDAQ's going to trade a little heavier. I think the impact's going to be a little bit bigger on technology stocks. So the reason why I bring that up is because the NASDAQ's had such a significant rally from the lows versus, you know, the S&P. I know the S&P and the Dow have been lagging, but that doesn't mean that the NASDAQ can't play a little catch up, right? So, you know, we could see the NASDAQ come off a little bit more aggressively today versus the S&P. So there's just something to think about if you guys are out there trading, you know, the equity markets. And one last thing, I know Dale talked about it. Dale talked about it this morning regarding silver and gold, but gold is breaking out. And we're near trend highs, and I don't see why we won't hit new highs. I don't see why we're not going to 1,800 and higher. Silver broke out of this triangle. You know, we've been monitoring that. We've been monitoring gold and silver. You know, if you use Forex analytics, you got to go over here every, you know, the basic technical analysis is the one that I and Steve and Paulie, we update. But every evening I'll update, you know, the daily charts. So if you're looking at that, and that's not on, and on top of that, a lot of the intraday charts. But you know, we've been looking at this, you know, triangle breakout, and alerted you yesterday when it started to break out in gold. Silver, we've been, you know, you could go back to early in the week, and silver is breaking out from a recent triangle, and that was on May 8th. And we have not changed the outlook since. And, you know, now silver is just finally ripping and catching up. And we are past the 618, and we're attacking previous support around 1650. That's important because it can obviously continue to go higher. But what's important about that is that we're, if we close above the 618 retracement that's right here at 1597, you know, we could trade, you know, up to the 78%, which is 1727. That's big from a percentage standpoint. So just, you know, if you guys are trading these precious metals and you're, you know, the natural inclination is, oh, I want to short them because they've rallied too much. You know, in this environment, I don't know if that's the, you know, smartest idea. And we talked a lot about that yesterday while we were here. Anyway, I'd like to bring in my colleagues like Steve and Stelios and Coach back and see if you guys have any comments before we have this retail sales number that comes out here this morning, which is our last. Well, I wouldn't say it's our last piece of data, but it's our biggest piece of data coming in for today. As we wrap it up. Whoops, went the wrong way. So. Oh, wait, no, I went the right way. Here we go. Friday. There we go. So retail sales. Good morning, guys.
Good morning.
Good morning.
How you doing?
Good, mate.
Very well. It's a summer here, so we're good.
Yeah, it is indeed.
Is it summer?
Well, it feels like it.
It's got too hot too fast. I mean, within the last 3 days, we transitioned from spring weather to like midsummer weather for some reason.
We did it within a week, yeah, here as well. It happened like that, but it's actually kind of cooled off over the last couple of days. But I get it. Yeah, it was 106 degrees. Usually, it's about 10 degrees cooler than our hottest weather throughout the middle of summer. So it was getting pretty toasty here. Yeah, so I get it. Well, it's summer there, kind of. But the markets are not reflective of it being summer. The markets still have a lot of volatility. What do you guys think about this? Sorry, it's Friday, so I'm always tired at the end of the week. What do you think of this Huawei news going into the weekend?
I think it's more than obvious that the U.S.-Chinese trade talks are on the right path, right? Probably that's what they're going to tell us later today.
Yeah.
Yeah.
That was a bit of sarcasm from a Greek for those of you listening in. But yeah, it's definitely going to be contentious, I would say. So
my prediction, Blake, is that especially with the coronavirus issues and with the elections looming and coming closer by the day, I think that it's not going to get easier. I think there's probably going to be escalation more than anything else, unless things really get derailed in stock markets. So, then they might try to contain the situation, throwing anything they have at it.
Yeah. Go ahead, Stelios.
No, I was going to say, it's obvious that the equity markets are driving pretty much everything these days. And when I take a step back or a few steps back and I look at what the global situation is, put aside coronavirus, which markets are expecting to be overcome. Let's say we go back to some kind of normality within, 6 months. You have the US-China situation, which any way you look at it, it's not getting better in any way. It's only getting worse. So, what is there that makes me feel positive about the next 6 to 12 months? Well, only if there is, we find a vaccine for the virus and there is a good treatment as well that works. That might be positive, but nothing else. And I still think in the long run, you have to be long equities only for inflation. If you're not long equities, you have to be long something else that captures inflation, which means not cash.
Oh, no, here comes the silver pitch.
No. Well, you know me, but I think in the long term you have to be long equities. But I think there's a leg lower coming, and I've been saying this for days or maybe a few weeks now, and I think it's coming. So I fail to see anything positive at the moment out there, and I'm wondering how the markets can stay at these levels. I mean, they are coming down a little bit yesterday and today, but really this should be. I think the move should be a little bit, quite a bit lower, and then we start to grind higher to all-time highs and more.
Yeah, and I have to go back to what Steve said, because I agree that the president's popularity is sinking by the day due to his the administration's response to the coronavirus. And it's really he's starting to get to the point where he's like, I've got to shake the tree a little bit to try to get my popularity up, whether it's attacking China, attacking the media, attacking whatever. But he's throwing a lot of things up against the wall, like a lot of spaghetti up against the wall to see what sticks. And the fact of the matter is China, everybody will get behind him regarding China. However, if it ends up being a very negative economic response, that could backfire on him, and that's I think the risk for the Trump administration moving forward. Anyway, we have retail sales coming out in 1 minute, and then I'm gonna pass it over to you, Steve, here in just a second. I'll stick around for the retail sales. Here's Bloomberg really quick. I'll just throw it up just so you guys can see it. Let me expand that out just a hair. So retail sales right here, the advanced retail sales, that's the whole number, and this is the minus food and energy, so the core number. So just watch those.
Ooh, minus 16.4.
Yeah, that's a negative number.
Empire
State came in a little bit better.
Empire State's the only good thing about these numbers.
These retail sale numbers come in pretty weak. All right. So anyway, I'm going to pass it over to you guys. Good luck today. Good luck, and be careful over this weekend, especially with holding anything over the weekend, because we could have a pretty negative China response over the weekend is what I'm thinking here. All right, guys.
Yep. Thank you, Blake.
Have a great week.
TGIF. Have a good weekend, Blake.
See you, Coach. Next year we'll go buy some stuff.
You guys. Looking forward.
All right.
Blake, I don't know if you're still here. That reminded me of the blue light special.
Someday I'll have to tell the people that story. All right. Yeah. See you guys.
Bye-bye.
Thanks. Hey, Dale, how you doing, man?
Hey, okay, Stel. How about you, buddy?
Good stuff. Good.
You gonna fill up your pool?
Yeah, it's ready.
All right. Don't dive into that. Don't do any dives in that pool.
The kids wait for me for the webinar to end, and they go, "Daddy, let's go to the pool." So as soon as this is over, I'm there.
All right.
Okay, so we talked about China. We talked about equities. I still don't get equities. I've been saying this. I think we're going to have a leg lower. Could we get to 3,000 on the S&P first? I think we could, but I think too many shorts have been squeezed out, and I think now the path lower is probably a little bit easier. So that's regarding equities. I mean, there wasn't that much this morning. We had some numbers out of Europe, actually. German GDP
minus 2.2, if I remember.
Minus 2.2 quarter on quarter, which is reasonable. I think it's in line with the UK as well, right? The UK was minus 2 or something like that.
Yeah.
Obviously, Q2 is going to be the one that shows the differentiation between countries.
That's going to be the big hit.
Yes, Eurozone GDP minus 3.8 quarter on quarter. So Germany obviously doing better than the average of the Eurozone, and the very little else this morning. We just, as I said before, I'm just looking at stocks for direction on the dollar. I mean, the dollar, and you have currencies like sterling and commodity currency. Commodity currencies have always been trading kind of in line with the dollar, but even sterling has become now a risk on, risk off the currency. Risk off, sterling depreciates, risk on, sterling appreciates, and the same with the commodity currencies like Canada, Norway, Aussie, Kiwi.
Yeah, but commodity currencies, I mean, it makes sense.
Because, yes, of course.
With the sterling, it's a little bit weird. I mean, yes, the Brexit plays a role, but I still don't understand why there is such a decent correlation with it. I mean, doesn't make much sense in my mind, but whatever. It is what it is. It's an observed thing lately, and somebody has to keep that in mind.
Yeah, I was actually having a conversation with a friend of mine who said to me, what do you think about the dollar? I said, what do you think about stocks? Because that's going to lead it.
Yeah.
And then he goes, what do you think about the Aussie? I've been looking at that. I said, what do you think about stocks? So it's the same answer. It's actually funny, but unfortunately,
we said it some time ago. Unfortunately, central banks with all this intervention have managed to make everything a single trade.
Yes.
I don't know for how long that's going to last, but for the time being, it's like everything is more or less one trade. Risk on, risk off, and FX is dancing to the same rhythm.
Yes. So yeah, that's what I'm looking at. I mean, I have nothing else to say today. It's been very quiet and just waiting for the weekend to come, really. Not much else happening.
I'm not sure I'm waiting for the weekend to come, being so hot. I don't know. I don't even want to be outside with so much heat, but okay.
Yeah.
Okay.
I wish I had something else to say, but I don't. It's been pretty quiet.
Okay, don't worry. We have a lot of things to look at the charts. Before we start, Venkat has some nice comment for us, but he's also asking, he says, many thanks are more than eye-opener to me. I have joined this week. I'm an IT consultant and also keen on swing trading, looking to place trades on weekly, monthly basis. There are a lot of swap rolling charges by brokers. Can you recommend which broker? Okay. We've said it before. We strongly, especially now that you've become a member, but even if you weren't, we strongly recommend visiting our investment program we're working with Forest Park FX. Forest Park FX was also the sponsor with IG of our recent event. They are the best introductory broker we've ever seen. That's why we're working with them. I mean, we trust them 100%. They're excellent in what they do, and they are the best. You can speak to them over Skype as well. They are the best to advise you on that. So you're going to tell them what kind of trading you do, what kind of instruments you trade, and your trading style, and they're going to guide you. You're probably going to speak with Trent if you call on Skype, and he's going to guide you in making the best choice, or anyhow giving you the possible options so you can choose one of them. They only work, of course, with regulated brokers, of the highest quality. So you don't have to worry about that at all. So having said that, let's go through some of the questions. But before we do that, I just wanted to show, because Dale mentioned it, I'm not really surprised that the gold-silver ratio, it is taking a tumble, because we saw this explosive high there. We saw a move lower, and then the rebound was clearly corrective. So another leg to the downside looks very likely. I wouldn't even be surprised at all to end up retesting the previous high at 93. Even here, after this move from 130 ounces of silver for 1 ounce of gold down to 106, by historical standards, the gold-silver ratio is extremely overvalued. Okay, now you see this acceleration higher in silver. Those of you that are members of Forex Analytics, you expected that. Those of you that are on the webinar also had heard me say it multiple times. These were textbook triangles, which had a very high probability of breaking to the upside, because that's what these type of formations most of the times end up doing. They break in the direction of the recent trend. In this case, it was obviously to the upside. Having said that, we've also surpassed now in silver the 61.8, and we're accelerating higher. Keep in mind that the next area of resistance, we're not so far away from it. It's roughly at 1660. That's a horizontal support resistance area. And above that, we also have at 1690, the 200 daily moving average. That's going to be important. Let me say that from a fundamental perspective, I still consider silver to be extremely undervalued. And if you're one of the people that are like, oh, why would you want to be short stocks? Why do you want to fight the Fed? If you really don't want to fight the Fed, be long monetary metals, because the Fed has explicitly said again and again and again that they want inflation. So, what is the best thing to own under circumstances? Monetary metals, gold and silver. So that covers more or less gold and silver. Before I finish, I can also add once again that because I did give some upside levels for silver, upside levels for gold, my next target here is 1771, which is the 127% extension of this pullback here, with 1821 being the area above that. Now, crude oil, unsurprisingly, I mean, we said that it was looking very likely that it's going to do so, has broken through the confluence of resistances at 20. And guess what? I mean, it's already at 22, testing 61.8 of the last move lower. This is a continuous, by the way, which confluences with the 50 daily moving average. I still think that we can easily find ourselves in a couple of days even up at 25. So in essence, all of these are looking likely to squeeze even further to the upside. Now, having to do with equities, and probably it's the better idea if we go down to a 4-hour chart. Having to do with equities, here's the S&P, for example. They did reverse higher yesterday, so they were quite negative up to a point in the day, and early in the day they started getting a bid, and they ended up closing actually quite positive. But we are seeing a rejection from this horizontal support resistance area at 28.75. Blake has already explained extensively what the main catalyst has been. Let me add here that you can more clearly see it on the 4-hour chart. This doesn't need a very high imagination to be viewed as a head and shoulders formation, right? So keep that in mind. I'm still short risk, and I intend to remain short risk. And if we do break through this neckline, the implied target would be at 25.50. Okay, my target, as you know, is higher. I'm targeting 26.30, 26.40, but it's okay.
There's a gap there people have been talking about. It doesn't show up on our charts, but I've seen this gap at 25.50 that some people have been talking about.
Yeah, might be the case, but coach, I don't want to push it. I'm going to be more than happy with 26.30, 26.40. I mean, my cost average is at almost at 29.05, so it's going to be quite a decent move to the downside. I won't complain about it.
Nice trade.
Thank you. Thank you so far, because it's still an open trade.
You take it.
Exactly. So I mean, you know how it is. I mean, it can still end up being negative. I have not de-risked it, and I don't intend to do so yet. So it's still an open trade. It can still go either way, but I feel quite fine about it. I mean, I don't even
pretty negative week. We should at least have some follow through next week.
Yeah, I'm not worried. Even yesterday that we were rebounding, I wasn't really worried about it. I mean, I didn't even consider doing something about it. So bottom line, if stocks fail from here, the S&P, as I've told you multiple times, is the risk, the global benchmark, the global risk barometer. So if you see the S&P fail below like 2780 or whatever, expect follow through from the vast majority of the markets. Like don't expect the DAX or the FTSE or whatever you name it to do anything really different. Now, I'm not going to even waste my time going over again the DXY and the Euro USD. I've keep repeating myself every single day, and nothing has changed. The cable, though, still remains under pressure and still below the neckline of this head and shoulders formation, so it's on its way. Now the target is at 118.82. I would be more conservative. I think 120 is a decent target if you want to, take some profits. Now having to do with the Aussie and the Kiwi, Aussie still holding quite nicely. You can see it here. I mean, it remains under pressure, but it hasn't broken down in any way. The same can't be said about the Kiwi, though, right? Because the Kiwi has posted a lower low. It has broken through this ascending wedge, and the difference between the two is clearly depicted here in the Aussie Kiwi, which you can see. I mean, it had a very beautiful rebound. Kudos to Amanda. Amanda actually caught that very nicely. I remember she was looking for a reversal from parity, and that's exactly what we got. We're currently breaking above this channel. Keep in mind, though, that this is the 61.8 and a little bit higher here at 1083. We have another horizontal support resistance area. So, this move might be overdone in the short term. I think, if you want to buy it, you likely want to wait for a dip lower, but quite a nice recovery from parity, quite a nice move to the upside from the Aussie Kiwi, which shows that perhaps after a pullback, it might continue to do well. Now, let me go through some of your questions. Good morning, happy Friday, etc., etc. to all. 1795 on future looks doable on gold. 1795, very easily, Gautam. I think we might end up seeing a lot higher levels than that and sooner than people might believe. DXY still going up. DXY still doing nothing, if you ask me. Holding up quite nicely, no question about it, but still within this triangle, right? So the DXY is still doing nothing. Thoughts on USD CAD? Nothing has changed in the USD CAD. I'm patiently expecting, as I was patiently expecting, for example, for gold and silver to break higher, which looked like the likeliest scenario, and it happened. I think the same thing is going to happen here. I'm patiently expecting what I consider a very likely probability, which is for the USD CAD to break the triangle trend line resistance and continue higher. Hasn't happened yet, but I'm still quite comfortable with predicting that, it's going to break to the upside. I think the chances are a lot higher than anything else. You guys have been great, very profitable this week. Everything in the green. Yes, I am. Oh, nice to hear that, Daniel. As soon as wait, I'll join, says Ariel. Yeah, I can say it oppositely. If you join, you'll increase your chances of having a good week. Dale, what do you say about Euro Yen? Okay, having to do with Euro Yen, let's have a look at it. There it is. So, Grega came on the show earlier this week, and he was quite bullish the Euro Yen, and I said that I do see the appeal. Let me also open it on the 4-hour chart. But if you remember, I did warn, and this is what we drew when we were up there. I did warn that we have a descending wedge, and I said that, listen, I wouldn't be buying it here. If we get a dip lower towards 115.50,
exactly what happened.
Yeah, I think it would be a much better level to attempt to buy it. And so far, this seems to be the case. Now, below 115.50, expect even lower prices. In any case, as I had warned back then, a few days back, in order for me to want to get involved with this, I want to see a break above this triangle. Okay, descending wedge, triangle, it's the same, geometrically speaking, it's the same formation. So I mean, I do understand why somebody would want to jump the gun because you get a better price and have bought it at 115.50, as we said. Personally, I'd rather buy it at a little bit of a worse price and have, better clarity of what's happening here. But it's totally up to you. Personally, that's what I think. Above the 61.8 at 116.50, which in this case, since for every day that passes, this trend line moves lower, we will have broken through it as well. I think above 116.50 is a good proposal to buy it. And even if this is a corrective rebound, once we break above that, I would think that we can even squeeze closer to 119 without even, posting an actual, bullish reversal on the daily chart or whatever. So I think it's a decent proposal, but you make the decision of how you want to trade it. How they can cut it from global suppliers. Yeah, it just isn't the same. Let me know if you received this. Hi, Cam. Okay, that's Joe. Let me see. Natural gas. Guys, short comment regarding. I keep commenting about the Euro USD every single day. I mean, why would you want to trade it? It's been stuck in this 1075 to 110 range for so long. Put your money at work at a better place. That's what I propose, really. I mean, there are things that are moving. Euro USD is not one of them. So, there's, if you're trading FX, which you're obviously doing, I mean, there are so many currency pairs you can trade, so many of them, that you really have no reason to force yourself to try to trade the Euro USD. Now, natural gas has found again support at this 160 little zone. Still, if this proves to be a low, still in a sequence of higher lows. Now we're seeing it oppositely from what it was happening for quite some time. Now we're seeing it diverge from crude oil, but in the opposite direction. So it was diverging, leading the way higher for crude oil. And once crude oil actually started moving higher, natural gas have started being under pressure. In any case, from a risk reward perspective, this is not a bad area to try to be long again. You can have a stop loss roughly at 150 and look for another attack of the $2 range. That's my point of view. Could you please put some light on Aussie Yen? Yeah, Aussie Yen was in the past and is once again one of the best risk proxies. Same with the Kiwi Yen. In danger of having posted a double top at the 61.8% fib at 70.17. Clearly, a move below 67.60 is going to trigger that double top formation and point a lot lower. Kiwi Yen clearly underperforming, so preferable if you want to be short from the Aussie Yen. And as you see, it's in the precipice of breaking down from a triangle, which of course would have very bearish implications, right? So if you were looking to be short, you'd rather be short the Kiwi Yen and not the Aussie Yen at the moment. You have a better chance of being of doing better. USD looks like it's reversing. I already covered USD CAD. Hi Steve, where are you adding to your short position on S&P 500? What is stopping you now? In hindsight, I should have added at yesterday's close or earlier today when we were backtesting this area. I could have added a little bit more. Keep in mind, I already have half of a position here, and given the fact that the volatility has, increased since the past, I'm okay with having half a position. But in any case, I think I will probably be adding a little bit once we break through this neckline. So I might increase my position to something like 2/3 of a full position once we break through that, and then look to start offloading at 26.30, 26.40. Okay. People talk about S&P fair value of 25.50. You know something, based on PE of 17. Nick, this is a very big conversation we can have, and I would gladly have a webinar to have this conversation, Stelios included in that. But what do you mean by fair value? I mean, if by fair value we mean we let the free market function and we let the S&P balance itself, 1550, I would look roughly 1,000 handles lower than you're looking at the moment. And I'm not kidding or exaggerating. Hi, Steve, can you please cover Euro Kiwi, Euro Pound? Yeah, thank you for reminding me, actually. I didn't really want to talk about the Euro Kiwi, which I will, of course, but I did want to talk again about Euro Pound. I've already mentioned Euro Pound, I think, probably every day of this week, and for a good reason I did that. And I'm going to show you why once I cover Euro Kiwi. So Euro Kiwi, if you remember, this is a 4-hour chart, by the way, right? I told you that there is a risk for both Euro Aussie and Euro Kiwi to jump higher once again. You see that Euro Kiwi is doing so better than Euro Aussie for the time being, but they're both rebounding. Because I told you that I expect risk off to come in the markets, and we know very well that Euro Aussie and Euro Kiwi have a very high correlation with risk, inverse correlation actually. So risk down, Euro Aussie and Euro Kiwi up, and vice versa. Keep in mind that this 182.50 remains a strong resistance area. So if you didn't catch this move higher, don't try to chase it here as we are approaching this area of resistance, because nobody says that we can't get rejected once again from there. Because look at this. One, two, three, four, and some of those multiple tests, you see that. Previously, another resistance there, support, support, support. So, you don't need to be, a technical guru to distinguish that, this is a very important zone for this market for the time being, right? And it's going to be an important zone. As you see, we've also set a price alert there, right? And it's going to be a very important zone no matter what happens, meaning there is a good chance that it's going to reject price action again, but it will also be important if we breach through it, because once we breach through it, that's probably going to indicate that there's going to be a lot more upside. Because once the bulls have the momentum to actually breach through this area after so many tests, then they will probably also have the strength to push this pair quite a lot higher. Okay, so keep that in mind. Now, as promised, back to the euro pound. And if you remember, I've kept mentioning the importance of the euro pound here. And the reason is a technical one and quite an easy to recognize one, which is which is the fact that this is a rectangle and we seem to be breaking higher finally today. And as we had measured days ago, the implications for such a move would be an extension towards 90.5 cents, which, as you see, coincidentally or not, it is a previous support resistance area. Okay, so keep that in mind. If we do close above this 88.60 area, that definitely has bullish implications. S&P Head and Shoulders break below 27.60. Yeah, roughly. Actually, a little bit higher if you ask me, 27.70. But what is 10 S&P handles between friends, right? You can have them. 182.50 on euro and yeah, that's a good point, Nick. Hi, Steve. Could you have a look at PHPT platinum? Yeah, absolutely. Here is platinum. XPT USD. And I can tell you two things about platinum. First of all, it's almost doing nothing. It's oscillating in a very tight range. Second of all, I think that whichever direction we break, we're going to see a decent extension, and I would probably favor a break to the upside. Breaking to the upside opens up immediately the 860 area, which is a nice confluence of resistances for a retest. Breaking to the downside, which would mean a break below 750, 755, is definitely going to be a very bearish development. Okay, but for the time being, it looks like it's lagging more or less the price action that silver was producing. So it looks a lot like it. So even looking at it from a fractal perspective, let's call it that, I think a decent chance it will break to the upside and push higher towards at least 860. Steve, could you cover Aussie Yen? Yeah, I did cover already Aussie Yen. I hadn't seen your question. Can you analyze USD? Yeah, Singaporean dollar. Yeah, absolutely. One of the exotic currency pairs that I am actively monitoring, and here's all you need to know about it. Right? I think we've broken out, or perhaps we broke out there. Doesn't really matter. So I do think that for the time being, the path of least resistance remains to the upside. As with the vast majority of the exotic currencies, they seem to still be quite weak against the dollar. Dale, do we have an interview, by the way, today?
Not today, buddy.
Okay. So let me go through the questions again and see if I missed any. Hello, how the somebody who asks what the FTSE 100 is doing, and the question is not much, but I do think that the path of least resistance remains lower. You can see here why. And in general, the FTSE 100 has been, from the main stock indices, it has remained one of the weakest ones. So probably quite a good short if you're looking for something to be short from the risk assets. It would have already done a lot worse if the pound was also if the pound wasn't also concurrently under pressure, which is somewhat helping. Another question that I seem to have missed, which is the CAD yen. There it is, the CAD yen. And what do you know? Perfect symmetrical triangle, right? Meaning not much to do here, but given the fact that we came in rather impulsively, from the upside, I think there is a decent chance that this is going to be resolved to the downside by producing a lower low eventually. So nothing to do as long as we're trapped within the symmetrical triangle. But in any case, my opinion is I would probably favor a downside breakdown. Okay. So hot here, it's 40 degrees Celsius, says Didier. No, it's not 40 Celsius here, but it's like 36 today. So
he's talking about Israel. It's Israel. It's 40.
Yeah, so not that hot, but also, quite hot.
Things are always hot in the Middle East.
Yeah, makes sense. In any way you look at it, right,
yeah,
Dale?
That's got a double meaning.
Yeah. Oh, our friend Amira says Italy 40 index. Okay, let's see. Here's a CFD. Yeah, what do you know? I think we have spoken about this index extensively in the past. Look at this.
Wow.
So bottom line, to make a long story short, I am very
recovery.
bearish.
Yeah.
There you go. Okay. I mean, can't get more clear than this.
Yeah.
Long term corrective. You can see this is a CFD that dates only back to 2011. Because I know exactly what the Italian stock index has done during the past decades. This move that you see here is a corrective move to a very big and impulsive downtrend. So I expect a lot more pain in Italy. And in general, if you've been a frequent listener here, you know that unfortunately I expect a lot more pain in Italy, from all sides, political, economic, financial, unfortunately. So yeah, I would not be long Italian stocks in any way. I think basically all the major index move the same way. Sometimes identical DAX equals NQ. Listen, Alberto, since you mentioned it, keep in mind that if you want to talk about first of all, there's no question about it. Of course, you have a point there, right? I mean, risk assets have a very high correlation with each other, but historically, the best correlation has been and I can also explain why, the correlation between the DAX and the Dow Jones. That's the most correlated pair. So usually, especially more in the past, the two mirrored very, very closely each other. And that has to do with because the Dow had a lot more manufacturing stocks, and the DAX is heavy on that as well. As you know, Germany remains, fortunate for the Germans, a manufacturing economy, and that is actually why. Anyhow, Coach, I think we covered quite a few topics today.
Great
and
job.
I think we can call it a day and a weekend. And yeah,
well,
of course.
Thank you, everyone.
Of course, members of Forex Analytics know where they can find us.
Into the members chat. And before you go, have a great weekend. Take a look at our site and do your work over the weekend. Plan your trades ahead of time so that there isn't impulse trading, FOMO trading happening. Have your game plan set up by the opening on Sunday night so that you're executing and not analyzing on the fly. So, and remember, don't just count your pips. Even if you had a great week, count your blessings, and we'll see everyone on Monday. We're going to kill it again next week. So thank you, everyone. Have a great weekend. Steve, great job this week again. And the best team on the net wishes you guys the best. We're all rooting for you.
Thank you, Coach. Have a nice weekend, everybody.
See you, everyone.